Oracle ORCL, Beginner's Guide. Imagine the software that quietly runs almost every big company's payroll, customer records, and financial books. The stuff nobody sees, but nothing works without. That is Oracle in a sentence. It is one of the oldest enterprise software companies in the world, and it has spent the last few years reinventing itself as a major player in cloud computing and AI infrastructure. Quick note before we start, this is educational only, not investment advice. We're here to understand the business, not to talk about the stock. So, what does Oracle actually do? Oracle sells 5 main things, and the easiest way to picture them is as a stack. At the bottom is the famous Oracle database, the software that stores and organizes the most important data inside large companies, like bank transactions, hospital patient records, and airline reservations. Combined with the support contracts customers pay every year to keep that database running, this older piece of the business brought in around $17 billion in fiscal 2025. That means the company's financial year ending in mid-2025. Then there is the part that is growing fast, cloud services. This is roughly $29 billion of revenue and about 54% of the total. Inside cloud services, you have 2 flavors. The first is OCI, Oracle Cloud Infrastructure, which is basically renting out massive amounts of computing power, including the GPUs, graphics processing units, the specialized chips that handle AI calculations, that AI companies need to train their models. The second flavor is cloud applications like Fusion ERP, HCM, and SCM. ERP means Enterprise Resource Planning, which is the software that runs a company's finances and operations. HCM is Human Capital Management, which is payroll and HR, and SCM is Supply Chain Management, which tracks inventory and shipments. Oracle also owns NetSuite, which is the same kind of software but built for small and mid-sized businesses, and Cerner, which is electronic health records used by hospitals. Finally, there is a smaller hardware business that sells servers and engineered systems, and a services business that helps customers actually install and configure all this software. The customers feeding Oracle revenue are giant enterprises migrating their old systems to the cloud, hyperscalers and AI labs buying compute for training, national governments wanting their own sovereign cloud regions, hospitals running on Cerner, and smaller businesses on NetSuite. On the supplier side, Oracle buys a lot of NVIDIA GPUs, partners with data center developers, and is locking down 10 gigawatts and counting of electric power to run all those AI workloads. So who does Oracle compete with, and how does it win? Oracle's competitors split by what part of the stack you are talking about. In the cloud infrastructure business, it competes with the 3 giants: Amazon Web Services, known as AWS, Microsoft Azure, and Google Cloud, often called GCP. In cloud applications, its main rivals are SAP, which is the German enterprise software company, and Workday, which specializes in HR and finance software. In the database itself, the open-source PostgreSQL and newer cloud-native databases like Amazon Aurora and Google Spanner are nibbling at the edges. Now, why does Oracle win, and importantly, where doesn't it? The Oracle database is what analysts call a system of record, meaning it is the official, trusted version of a company's data. 40-plus years of regulatory compliance, audit trails, and battle-tested reliability mean that no large bank, hospital, or government is going to rip out Oracle and replace it. That is what we mean by a moat, a competitive advantage that keeps rivals from catching up. AI actually reinforces that moat because AI agents need clean, trusted data to work on, and Oracle holds that data. The flip side, and this is why we call Oracle's moat narrow rather than wide, is that brand new applications and brand new companies often default to cheaper, open-source alternatives instead of Oracle. So the existing customer base stays loyal, but Oracle has to fight harder for new workloads, especially at the application layer, where AI can abstract away the user interface and make it easier to switch. What are the key drivers for the business over the past 5 years? 3 forces have driven Oracle over the past 5 years. The first is the cloud transformation. 5 years ago, cloud services was a roughly $7 billion business. Today, it is $29 billion. That is more than 4 times bigger, and it is now the majority of Oracle's revenue. The shift is from selling perpetual software licenses, which is a one-time payment, to recurring cloud subscriptions, which is a steady stream of money every quarter. That kind of recurring revenue is more predictable and tends to grow faster. The second force is the AI infrastructure boom. Oracle's OCI AI infrastructure revenue grew 243% year-over-year, so more than tripled. Its multi-cloud database business, which means running Oracle database inside Microsoft Azure, Google Cloud, and Amazon's cloud, grew 531% year-over-year. To put numbers on the demand pipeline, Oracle has $553 billion of RPO, remaining performance obligations, which is fancy accounting for signed contracts where the customer has committed to pay. But Oracle has not yet delivered the service. That is one of the largest backlogs anywhere in tech, and it tells you how much demand is locked in for the coming years. The third force is operating leverage from scale. Operating margin, the share of every revenue dollar that turns into profit before interest and taxes, expanded from about 28% to roughly 32% as cloud volumes grew and the high-margin license support business kept funding the build-out. To wrap up, so to land the plane, Oracle is a 40-year-old enterprise software company that runs the trusted databases inside the world's biggest organizations. And it has reinvented itself as a cloud and AI infrastructure provider with one of the largest signed contract backlogs in tech. As a learner, what you want to keep an eye on is the cloud growth rate, the pace at which the company can actually build new data centers and secure the electric power to run them, and how quickly the AI workloads in that signed backlog convert into recognized revenue. That is what tells you whether the cloud reinvention is real and on track. As always, this is educational only and not investment advice. The goal here is just to understand the business before you do your own deeper research.